Well, you know what it is today? Is Tuesday, 2/22/22.
Yes, it is. Yeah.
Did you know that, or did my social media skills beat you to the chest?
You beat me to it. I looked at it and thought that was cool, but I didn't.
Well, I got one more for you. Every day this week is a palindrome, so you can say the numbers forwards or backwards. 2/23, 2022, or 22, 24, 25, doesn't matter. Huh? Yeah, put it in your head.
I don't.
Let it happen. 2/22/22, 2/23/22, 2/24/22. There's always two twos and then a number and then two twos.
It's nuts.
It's
Crazy how time works.
I'll let you soak that in for a second. Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How we doing out there? Hope you're having a good day. Happy Tuesday, right? You get it? All right. Hey, we're smarter than that here. We're financial advisors here at Jazz Wealth. We like to do this show every day just to keep you guys updated. You know the drill. Last week, our Wine and Wealth class, by the way, was public. So if you want to see it, we went over the performance of our funds. The goal not to be to share like somehow we're better than everybody else, although I think we're doing better than most. The goal was mostly to just show we're that transparent. We don't care, right? If something's not going right, we want you to know about it. We want you to know how we're going to fix it. If something's going well, we want you to know about it so you can sleep well at night. So I take the criticism, I take all that stuff. Doesn't matter. I mean, it's the point of being transparent. So you can check that out. Actually, it's on our channel. I believe it's on our YouTube channel if you want to check out the performance of our various funds there. They range from really aggressive all the way down to super, super conservative. Hey, by the way, Cody, this is for you. It's the anniversary of the Miracle on Ice. Do you know what the Miracle on Ice is?
I've heard of the Miracle on Ice.
Not
yeah.
Disney, but the actual Miracle on Ice.
Yeah.
Yeah.
Well, yeah. Al Michaels, do you believe? Is that Al Michaels? Yeah. Al Michaels is the one that says, "Do you believe in miracles?" Yes.
That one, I couldn't tell you who that was, but old U.S. taking over Russia, and look what's happening today, huh?
Could be. Yeah. Okay.
What a difference 42 years makes, huh? Hey, anyways, stock market today, a little bit lower to start off the week. And actually, we were lower overnight. Let me show you real quick. So we were actually lower overnight and then woke up this morning and we saw we'd already recovered a little bit. We'll go to like the 5-minute chart. There you go. So we're coming into Tuesday here. We were down really 400 or 500 points on the Dow, about 70 points on the S&P. And then through the early morning hours, we actually had a decent rally, still negative. And then Biden started talking, or we got word that Biden was going to talk. He starts talking. That took forever. And then all of a sudden he stops talking and we immediately start getting a rally. So a little bit of that, I don't know how far you guys go back, but a little bit of that Bush type thing from President George W.'s days where during a financial crisis, whenever George Bush was scheduled to talk or he would say, I'm going to go do a press conference or whatever, the market would go down. So a little bit of flashbacks there I saw when Biden was talking. But the second he was done talking, we were higher from there because he didn't take any questions, first of all. But there was really nothing new that wasn't already kind of baked into the market. So the market was expecting maybe something dramatic to come of it, and nothing really did. I mean, the whole thing is obviously dramatic in its own right, but no new known sanctions or anything, or nothing that hadn't been anticipated from previous incursions around the world there. Now, I would mention that what's happening in Russia really only affects a few people in terms of market participants, right? So if you're a short-term trader, this affects you, right? If you are someone who's heavy on margin, you like to use a lot of margin, well, all right, this affects you. You want to pay close attention. If you're exposed to oil, natural gas, titanium, stocks that are related to that, like Boeing, we covered last week, all right, then these are some of the people that maybe want to have more of a focus. If you're a longer-term sort of plan-driven type investor, then these things, like I mentioned before, they tend to be little blips on the radar, but it's a lot of fun to watch in the meantime. If you go over to the S&P here today, there we go. I'll use the SPY, I think, because we're going to reference this a couple times today. We are now hinting at the 10% pullback, right? If we look at the S&P, the index, we're down 9.68%. We're down, so we're getting close to 10% there. I wondered, is that quick? have we fallen fast down to that almost 10% there? This would be the 31st day of the pullback since hitting the new 52-week high there. And the median length of time for the S&P to correct 10%, looking back 45 years now, is 32 days. So this is well within norm, within the median, at least at the moment there. Now this pullback's from 52-week highs. This is, I'm saying right here, right? So from here to here, we're at 31 days. There are actually 23 other corrections that happened where we hit 10% coming off of 52-week highs. Of that, 4 of them were actually at the bottom when 10% hit. Let me stay with that for a second. So what I'm saying is both the pullback in duration and in severity was 10%, or whatever it ended up being, right? So when we hit the 10% pullback, 4 times out of those 23 was actually the bottom. Every other case was not actually the bottom. What's interesting about this, though, is you think, okay, you got a 10% pullback. Most of the time it continues a little bit further. How bad does it get? Do we fall 20%? Does it become an official bear market? A bear market would be a 20% drop. None of them, not one of these pullbacks, if you look through all 23 of them, none of them fell 20% unless they bounced 10% first. So there were some times where we came off of 52-week highs, we fell 10%, then over some period of time fell the full 20%. But none of them happened without a 10% bounce first. Kind of interesting. I don't know. I mean, they all eventually turned into corrections, but getting a 10% bounce first is still very helpful. And also notice that where the market is, we're hinting at breaking this previous low. And so breaking that low does 2 things. Number one, it solidifies the fact that we're going to fall 10%, right? Because that would, on an intraday basis, we fell 10%. But the other thing it does is it would extend the market. Think about what happens here. Let's use the SPY. Think about what happens if we break this low, all of a sudden we're down here. Look how extended the market starts getting. So by breaking the low is not a bearish thing, right? It's temporarily uncomfortable, but it's not a bearish thing. You'd actually look at the market being super extended at that point, probably a lot of stocks with it. So I actually kind of hope that happens. Now, it's already happening in the NASDAQ. On an intraday basis, we did break the lows. We didn't close below it, so there is a dissection between the two. But nonetheless, if we do roll over tomorrow, or I don't know, let's say there's more drama to come out of the world, then you have a NASDAQ that's extended, along with many of the stocks inside of the NASDAQ there. So definitely something to look at. Now, the NASDAQ composite, COMP, I believe. Yeah. So the NASDAQ composite, little different story here. You're going to hear a lot of people talk about the death cross. All right? The death cross is where the 50-day moving average, the blue line, breaks below the 200-day moving average, the red line. It's an old technical pattern that people used to like to talk about where they would assume death cross. That doesn't sound good, right? Usually people assume it to be a bad thing. However, every time something like this has happened, where the 50 crosses above or below the 200, we always talk about this. There are 10 other times in the last 50 years where the blue line has gone beneath the 200-day moving average while the market was below it. There's certain instances where that can happen. Now, the key is, over the next week and the next month, the stock market's actually kind of bullish, right? Not great, but it's a little bullish. 90% of the time when that blue line crosses below the red, to just say it as elementary as I can, 90% of the time the stock market is actually higher. The average gain is 3.2%. The median gain is 3.3%. So roughly right around 3% where you're looking when you have a death cross. So it's not bearish in the short term. Now, a little further from there, now it gets a little nasty. You start looking, 3 months and 6 months out. Yeah, it'd be some nasty stuff in there. The long-term trend leans bullish, of course, because the market goes up, but there's some nasty ones in there. Maybe we'll cover that on another go-around. But nonetheless, you got the death cross there. I also want to point out Russia. You can use the RSX if you don't want to, or if you don't have the ability to look overseas. The RSX is an ETF tracking basically Russia, and it took a 10% hit last night. Right, so that broke to new lows, and they're already the worst performing area, I should say the worst performing country in the world. And I was going to point out, see if I can do this here real quick for you. Russia being the worst, Brazil, by the way, being the best. So if you're wondering, like, what's going on over there, would be Brazil. Let me show you this here. We talked about this in our Notes from Jazz. So if you're one of our clients or research members, if you go in Notes from Jazz there, I put it down here. Yeah, Brazil's performing 3 times better so far than any other market around the world. Gains totaling 17%, today not included. And Hong Kong comes in second. And as you might have been able to guess, Russia's in last place with 15%. That was when I wrote it. Now we're looking at 23%, right? So big move there in Russia. If you want to read some of the stats there, you can go back and check out the notes from Jazz if you're interested. Now, the Dow. Similar story, right? It was holding up the best out of all of them. Still is. It's up 7.5% year to date, which is better than any other index out there, but still weakening in the short term, looking to break that intraday low over here, which would then make it extended. So your assumption as a short-term trader, someone who's out there playing the game day to day, you actually want that to happen because you'd have a really volatile, really extended stock market to try to get some long positions in there. But for the moment, like we said on the office trades today, it was kind of tough to really get a lot going because you kind of fear that that's going to make a new low, and that's where the opportunity is, not right now. All right, you got rates moving a little bit lower during the day. After hours, they moved a little bit higher. The reason was you had a Fed president come out over the weekend. I forget who it was. It wasn't Jerome Powell. You had a Fed president come out. His exact quote that I wrote down was, "We are watching to see the appropriate size of the rate hike in March." And that's what moved bonds, right? Because what do you mean the appropriate size? A quarter point, right? Is that what you're doing? No. They're watching to see what the appropriate size of a rate hike is. That opened the door to maybe a half point rate hike or more. I mean, a lot of people think half point at this point in time, but that's what kind of hurt your bonds throughout the day there. And so you got yields moving just ever so slightly higher, although after hours, decided to move the other way. Oil briefly gets above $95, started to pull back throughout the day. This actually led to a lot of oil stocks, energy stocks in general. We talked about Devon Energy in the office trades today. A lot of stocks in this category gapped up and sold off, right? Because of the move in oil rising and then selling off throughout the day. I'll talk about that in here in just a little bit. My biggest worry, you think about everything going on. All right, let's just put that aside for a second. We got an economy recovering here, right? And everybody's pretty excited about that. Earnings are okay. It wasn't the greatest earnings season. But we know inflation's high. Sure, we got that there. More money, too few goods offered to, more people trying. How do they say that? Too many people chasing too few goods, right? General inflation 101. You get that. The problem is, if it happens to an individual company where the demand is so high that they don't have the product to sell, okay, they can try to ramp up production and maybe they make more money or maybe they don't. The trouble is the whole world, well, let's say the whole United States sees demand off the charts. Ask yourself, how much more are you working right now, right? Is your business or your company you work for, aren't they busy? Is everybody freaking busy right now? So if we're all out there chasing too few goods, companies naturally are saying, let's ramp that up. Let's make more goods. Let's get it going. We'll find the supply somehow. We'll make other stuff. We're going to sell stuff. It's great. We're going to raise prices and we're going to sell more stuff. The problem is, historically, companies are lagging the demand curve, meaning by the time they start ramping up production, demand's already drying up. And what ends up is demand flattens out or starts to pull back, but the inventory levels are sky high because they took time to produce. The lead time to produce stuff gets, obviously it is what it is. But all of a sudden, we have so many products, we have now less people wanting to buy those products. And so that's where you end up in trouble. So I'm going to really be watching things like that, because if we see inventory levels starting to creep up, that could be assumed as a good thing. But if demand's not there, then that's not a good, that overall couldn't be a good thing. Right now, retail sales, sporting goods, declining. They started to decline. They're not falling. They just started to decline. We had a big spike during COVID, and now it's starting to flatten out. Furniture, electronics, clothing, food and beverage, personal care. These are all categories you can look up in the retail sales numbers. They're all doing this, right? Did we just buy everything? Are we not already kind of on the back end of buying stuff, but yet producers are producing more and more? What happens when supply chain issues kind of go away, at least a little bit? What happens when there's more product or more raw materials to build these products? So that's what I worry about in terms of the overall economy and the health of the market going forward there. A great example, by the way, is Clorox. You guys remember that? So think about Clorox. This is a great example of one specific company. Oh my gosh, we have a virus out there. Let's go get some bleach, right? That'll get rid of the virus. Clorox kills everything. So all of a sudden, Clorox is like, what? We're out of bleach. We're out of those hand wipes and all the other products they sell. What do? They start making more. They start making more. As they're making more, stock price going higher. Oh my God, this is great. Clorox is doing really well. But then we find out we don't need Clorox. That's not going to really do anything. And so what? Right? Same with toilet paper and things like that. We go, what are we doing? Right? We don't need all that. Well, meanwhile, demand drops off, and they're still making the devil out of bleach and all their products, I should say. And so the stock's really taking a big hit. Don't you kind of worry about that for the stock market? Oh, 3M. That's another one. How many of you guys remember 3M? All over TV, right? There's a virus. We all have to get these special masks, not just any masks, special masks. Got to get them. Who makes them? 3M. All the news agencies are sitting in 3M's manufacturing, and they're like, look, the machines are going as fast as they can. They're making masks like crazy. Come to find out, we're just going to wear a piece of cloth. That'll do the same thing. 3M gets left in the dust. They have all these masks, right? And what happened just a couple weeks ago? They're like, those N95s, not regular N95s, KN95s are the ones you got to have. 3M's like, look, we're not falling for this again. They didn't ramp up production. Stock gets hit. Now multiply that times all the companies that are out there, right? That's where the worry is, and it's I think it's warranted. You guys can tell me, but that's where the worry is where we all of a sudden have companies producing the devil out of stuff. And we just don't want as much anymore. We've moved on. We're going back on cruises and vacations and stuff. Anyways, that is that. In our office trades here today, just real quick, we did a handful of closing out of positions because the market was selling off this morning. So a lot of our short positions, we got out of the way. We bought back the American Express calls. Actually, that order did go through. $1.04 there, so over 50% profit on that sucker. We got Cody's play. Dow Chemicals, he had a 62.50 calls, bought those back. I rolled the Facebook... we had sold some puts on Facebook, rolled that forward for another 320. You can see all this in actually as it's happening in our office trades, jazzwealth.com/research. Marathon Petroleum closed out that call again, gap up, sell off today. That was in the oil space, and closed out the 215 calls in the IWMs, the Russell 2000, and EXPE, Expedia, closed out the 240 calls there. And all of that is shown, of course. All of them were, I believe, over 50%. American Express wasn't at the time of when we did it, but it is closing for $1.04 because the market sold off as old Biden was giving us the speech there. And then we put on AAP and 3M. I just mentioned 3M, right? So 3M obviously very extended. So on 3M, it was sold the 135 puts on that one just to play directionally. It wasn't not doing anything fancy there. So that is that. New highs and lows for the day. Hey, actually, look, you got Air Products. I happen to have this one as well. I played it for the first bounce. It happened in one day. Hopefully it starts to bounce again. Otherwise, it's taking back my profits. But you got Air Products, very extended, hit a new low to start the day. And Ecolab, ECL is a ticker symbol, also hitting new lows and getting extended, so I'll give it that one. FedEx is the same way, has been rolling over, headed back towards prior lows and finding itself rather extended. And then the rest of them were in the oil space. These hit new highs to start the day. Marathon Oil gaps up to new highs, immediately starts selling off. It did not look back from any point from the start of the day. And then I got to point out Devon, right? So you got Devon Energy is one of the new lows as well. 6 new highs, 34 new lows on the day. And there's a lot of really interesting symbols on a new high and low list. So you wonder where we get some ideas from. This is that time where you're starting to see, okay, there might be a few things to do there, so worth checking out. All right, I'll take the stocks in the news and then answer your questions there if I can. First up is Carnival Cruise, down 3% on the day. Carnival Cruise says, hey, masks aren't going to be required on cruise ships after March. So in actually it's a short month. After 7 days from now, you won't need to wear a mask if you feel like going on a cruise. I think the vaccine was still, you got to have that. But other than that, that's kind of cool, loosening it up a little bit there. DWAC in the news. This is remember, this is not the Trump SPAC yet. So I saw a lot of people talking about this. It's not official, right? Trump media, whatever they call themselves, could still go this way. They don't have to go this way. It is presumed that they're going to go this way, and the stock was higher because the app came out. Truth Social, the Trump app, came out over the weekend, and so everybody was all excited about that. This is not a done deal just yet. Careful there on that one, but it probably will be a done deal. Stock was 10% higher on the day for the launch of that app. Home Depot So Home Depot comes out with earnings there, better than expected on earnings. They raised their dividend 15% or so. The key to this earnings report is they're selling less products to the retail audience because the retail audience is just paying contractors to go do their work. And so the big money came from the Home Depot Pro version, right? So instead of you going and buying the paint and then you painting, you got money, you're out there just paying somebody to paint. That was the moral of Home Depot's comments and everything that came out. I don't know if that's true or not, but that's what they saw. McDonald's in the news there. Carl Icahn gets 2 board members on McDonald's board. And Carl Icahn's been trying to do that, I believe, for about a year now. And he was successful. Stock was up about 1% on the day. Apache, one of those gap up and sell-offs today. That's interesting. It's in the same oil space, right? Something to note. Earnings came in a little bit weaker than expected. Not much else here. They pay about 12 cents, 12.5 cents in dividends. They raised that the other day, right? Yeah, they were at 6. They doubled it, or at 12.5 cents. Earnings come in at $1.05. Just a slight miss there. And Macy's, yeah, they're still around. They still sell stuff. Better than expected earnings, raised their guidance, and revenue was better than expected as well. So they beat on all 3 metrics there. It wasn't a home run. Slightly higher margins. Everybody's at least a little bit happy there. Not enough to break it out of that range. So that's all you got there. Interestingly, if I could point this out before I take your questions, I thought we'd try something. Over the course of this week, what is historically the best performing sector? What is the worst performing sector? The best performing sector historically over this week is tech. Second comes in, there's another spam call, how about that? You like that, my jazz music? So tech is the best first best performing sector, and consumer discretionary comes in second. So that's starting to roll over there a little bit. The worst is real estate. So during this week, real estate, historically, just looking back the last 10 years, this is the sector that performs the worst. So kind of fun. Average loss on that one is 0.70%. That's just in a week, so these aren't going to be large numbers. And tech was at 0.72% gain. Just something fun to point out. How about that? Yep. All right, take your questions if I can. To buy on margin, you need coverage for the margin calls. Learn that the hard way. Hence the screen name, is that what you're saying? Yeah. Let's see what we got here. Yeah, I saw Kraft again. We talked about that this morning. Kraft Heinz, out of nowhere. Typical slow consumer staple stock. Ever since earnings, off to the races there. Yeah. So are we in a cycle where Joe will talk every day and drag them? I don't know. That was a big thing. George W. came out. It was after 9/11, so there was a lot more communication naturally. But man, it would be, he's coming to the podium short, and just religiously the market would sell off. He was done talking, back up again. We're all good. That was fascinating there. MW, when are you going to show the 1-year performance of the funds? I believe I did. I know I showed year to date. That was my focus, was because January had the big pullback, so I wanted to show the pullbacks there. Actually, and clients can see anything. You can zoom out as far back as you like, I believe. So you can just hit the 1-year button in the dojo or folio if you're still going in there. But I thought I did. I feel like I did because somebody asked that question. Sometimes I ramble, and maybe I didn't, so I won't put it past me. Ricardo wants to know if you're a millionaire, yes or no? Cody? Oh, no, he's asking me. So I would say yes, but lately, with having to spend so much on the business, I actually told clients the other day, it's probably been a month. I mentioned that we just got to the point where I don't have to fund the business anymore. I think we did it faster than Tesla, to be honest. So that was the joke I think I used there. What do you think? What do you think, Dustin? 3M with all the lawsuits and everything pending at the moment, I'm guessing you're saying. I'm not hip with the cool kids things there. So it's not, for me, it's not a long-term play. This is for the office trade segment. So this is just purely, hey, it's extended, use the research site, found out how often it falls this much, does it end up bouncing or going sideways? Like those odds, took a shot, that's it. As far as a long-term investment, I'd like to add a little bit. I wouldn't mind adding to it, but no. Yeah, it's just a directional thing for me. Love the double. Oh, thoughts on Nikola? The world is divided on it. I don't really have much to say on that one. Like, what are they? That's a gamble right there. That's a pretty good gamble. I don't know how you walk away from that anytime. What happened anytime in a couple years? I mean, that's not something you just they pick their pieces up and move along. You find out there's nothing really there. I don't think I have much good to say on that one. Just because you know, I think about my perspective. I'm the guy that's supposed to make those decisions as for an investment or not. It's not an investment. No. Yeah. J-Dub says, still use Folio to check performance since it's easier to see. Easier? Oh, hurts me, man. When you log into the dojo, you just change the date. We spent a lot of time on that, J-Dub. You just change the... No? All right. Tell me what you don't like about it, man. We can build it, anything, right? I just thought, hey, when people log in, let's hit them with the performance. Don't make them hunt for it. Folio makes you hunt for it a little bit. I don't like that. I didn't? Oh, Matthew. I'll take it. If I didn't do it, then we'll have to do it again. We'll do another one. I don't mind. If you had to pick a tilt-like value, I'm not sure what that means. Help me with that question a little bit. J-Dub does say I rambled. Yeah. That's why you notice religiously here, 30 minutes, right? If I've got things to say, take your question 30 minutes, because otherwise 2 hours go by. You know, next thing you know, I bring you home with me, and you're helping me feed the dog and stuff. It happens. Any thoughts on Palo Alto? Typically, they don't do so well on earnings results, right? They don't do so good on earnings. I was going to try to pull it up for you. But I don't know if I could do it fast enough. When they report earnings, the stock ends up lower more times than not. I remember that vividly because I thought, I'm going to be a hero one day, and I'm going to bet that this is the time it doesn't. I was wrong. Should have followed the odds on that one. But no immediate thoughts on that one. Mercado Libre had earnings today. I think you're right on that. Broke one of the new lows today. Loss of 92 cents. No. Yeah. I believe that would be less than what was expected, though. I think they were... No, they were expected to gain 89 cents. Got a loss of 92 cents. Must be something else there. The stock's around $1,000 almost. I didn't catch it. Use that for tomorrow. I got that question a lot today. Time to buy more Roku, or buy Roku in general. In the office trades there, I was tempted, but to me, maybe on a down day or something, I don't have a good answer for this one. Like, just seeing this, you're like, all right, I like that it's trying to recover from that gap down. What do I do? It's just a guess. You know what I mean? There's nothing wrong with taking a guess, but for me, a little more on the conservative side, I don't think I would do it. You think COVID's finally hit bottom there? Probably right. Yeah. It's not a fast-moving stock, though, right? So, and I think I said COVID. If you think Clorox is at a low, you're probably right there on that statement. But it's normally not a fast mover, so don't look for don't look for that to just rocket ship back above 160, and you're like, yay, you know. All that jazz is cool. Oh, thank you. Next big thing, I can't tell you. Nah, I can't tell you. J-Dub, well, since you're in Folio, you can compare that if you'd like. Yeah, we thought we were being helpful putting it in the dojo, and you just, J-Dub said, no, I don't want to use it, man. I don't like it. Customizable windows. What do you mean? You like the momentum there on Nikola? Well, it's not in the stock, so if you're reading something about the company, that could be different. I don't follow them that closely because that sort of turns you off when you find out there's shenanigans going on there, huh? Yeah. Macy's was down even though they had, I thought it was pretty decent earnings. It wasn't a blowout earnings report. Remember, the theme of this earnings cycle, as it comes to an end basically, has been if you report as expected, you better have something up your sleeve or the stock's not going up. The average stock movement is down over 1% on earnings announcements. So we saw that very early and go, okay, you have to have a blow away earnings report in order to get the stock higher. Otherwise, the average move was to the downside. Still wondering why Folio is showing a different amount than the dojo. The dojo updates once a day. Yeah, so your balance wouldn't update during the day. Just yet. Yeah. This isn't the type of market to speculate. For traders, it is. Yeah, if you're trying to speculate on an investment, I'll give you that. That's pretty tough. But for traders, this is exactly what you want. They, having a sleepy market for years, patience is paying off there. Yep. You don't see the, all right, we'll have to look into that then, because you can choose the drop-down menu to zoom back, right? And I think it's like, 1 day, 1 month, 3 months, year to date, 6 months, 1 year, 3 years, 2 years. That should all be in there. Yeah. Super troopers. I love it. All right. I'll wrap it up there and see what J-Dub's problem is. See if I can figure that out. I'm sure we can. Enjoy the rest of your day. We'll be back tomorrow to do it all over again, and adios.